Hi, my name is Jonathan Bay, and welcome to My Compound Life, where we build assets, build habits, and build freedom. So in today's video, we're going to dive into one of the most important yet often overlooked topic in Bitcoin and crypto investment. Specifically, when to sell Bitcoin, when is the top, especially when we have reached Bitcoin all-time high in recent few days. Because let's face it, everyone talks about when to buy, but almost no one prepares for the exit or unwilling to exit when the price is skyrocketing. This video is a reminder for you to think strategically and put yourself an exit plan. I've been through the ups and downs of the market and made my share of mistakes and learned the hard way what it takes to win in the longer term. And now at around 40, I can proudly say I'm living the life I set out to build. So out of the 4 Bitcoin cycles, this is my third one. If this is your first Bitcoin cycle, trust me, you'll find information I'm about to deliver very useful. If this is your second or third cycle, you probably know the drill already. But as always, it's good to go over some of the checklists that I'm about to deliver. So let's get into it. There'll be 2 things I want to chat with you all about on this video. Number 1, let's address this. Are we at the top? What are the signals to watch out for? And should you sell or keep all of your Bitcoin this cycle? For example, you know that Bitcoin is highly scarce. You know it's going to 500,000, $1 million US. Do you sell now or do you accumulate later? So I'll walk you through the 4 indicators that I personally use to guide my decision. And second things I want to address in this video is the habits we need to start building, because we can never time the Bitcoin all-time high. We can only hope that it constantly goes higher. So you need to start practicing yourself. And what are some of the process and protocol involved? I'll walk you through how to build the habits to take profits with confidence and not emotions. Okay, first off, how do you know whether we are at the top? You never know the exact top, but the signs are always there. Every cycle, we see the same pattern. Suddenly, your Uber driver is talking about altcoins. Your aunt is calling you, asking about Bitcoin. That's what investors call them the shoe shine signal. When the average person with no prior interest becomes convinced this is the next big thing, this is where you need to be worried about. This is coined out by Joe Kennedy back in 1929. When shoeshine boys start giving stock tips, it's time to get out. In crypto, we've seen it in 2017 and 2021. When everyone around you thinks they're genius investors, chances are we're near the top. It's not about intelligence, it's about herd behavior. And when the crowd is all rushing in, the smart money essentially is already heading to the exit. There are also data signals back in 2017 and 2021. Google Trends showed search terms like buy Bitcoin, how to invest in crypto, or Bitcoin itself spiking a record highs right as Bitcoin was about peaking. The same thing happened in App Store when Coinbase or Robinhood, Binance hit number 1. It meant that retail FOMO had finally arrived. So in May 2021, Coinbase topped the charts 2 days later when Bitcoin began a massive correction. That's not a coincidence, that's behavior. When new users start flooding in the mass, it usually marks the end of an euphoria run. And don't forget the media. When the BBC, the Bloomberg, CNBC is doing daily specials on Bitcoin, when Time magazine is putting NFT on the cover, or when celebrity like Matt Damon is telling you fortune favors the brave, that's when you should start thinking about taking profit, not entering or buying or continue with your stacking for Bitcoin. And that brings us the takeaway, right? Don't try to time the perfect top. Just plan for it. This is why I believe pound cost averaging out, just like we PCA in or dollar cost averaging in. You don't need to sell everything at once. But when the signals are flashing, Google spikes, App Store peaks, media frenzy, friends and family piling in. That's when you start trimming. Take back some of the lifestyle chips, because when the top hits, Bitcoin historically only stays within 5 to 10% of its all-time high for a few days. That window closes fast. So don't aim for the perfect top, aim to be prepared. So I also pay a lot of attention of all above signal, but at the same time, I also need to formalize a kind of like a routine that can help me to keep track of the signals and progress when all the dials are shouting overheating. So on this video, I'll introduce a few key signals. These are some of the free indicators that you can get access to. They are near real-time data. I'll also be putting the URL on the video description so that you can check that out. I hope you find all of them useful. First off, I'll be running through the Bitcoin rainbow chart. I'm sure you all knew about this one. So let's break down a super cool tool that helps you decide when to buy and when to sell Bitcoin without needing to be a technical analyst. It's not just pretty color for fun. It's actually a long-term chart that overlays Bitcoin historical price movement with a rainbow color of bands. Each color tells you what kind of mood the market is in, whether we're in the bargain territory or we're in the bubble land, which is just a fancy way of saying it looks at how Bitcoin grown over time on a curve scale. Because Bitcoin doesn't grow in a straight line, it has crazy ups and downs, but over the years it tends to follow a certain pattern. This rainbow tool shows those patterns by dividing price level into colored zones, kind of like a heat map of emotions. So here's how you read it. Let's break it down simply. Dark blue means basically a fire sale. Bitcoin is super cheap historically. This is when smart money start buying. This is where you should start buying too. And green means accumulate. Good time to slowly add to your holding. Yellow says hodl, the chill mode, right? So you're in a healthy zone. If you have a good stash or accumulator during the green and dark blue zone, congratulations. You just need to hodl now. Orange is when people start asking, is this a bubble? Is this right now? Do we or should we be getting out? And red and dark red scream FOMO territory, right? Fear of missing out territory. Maximum bubble zone. This is when everyone's hyped, the media is buzzing. Coinbase ranked #1 in App Store. And maybe, just maybe, it's time to start thinking about taking profits here. So depends on when you get into Bitcoin. Let's say you got in at $90,000. Congratulations, by the way, as you're in profit. But if you have the expectation that Bitcoin will give you a 10x this cycle and give you a 900,000 by the time you cash out, because the internet obviously will be telling you crypto, Bitcoin, everything is going 10x, 100x. You need to be careful. When the indicator is screaming FOMO red at around, for example, 150,000. Seriously, that hoping that Bitcoin will somehow make it through to $900,000 will highly be unrealistic this cycle. So when it starts to get into the red zone, it's time to get out. Of course, you want an aim at cashing out. Certainly, one might debate to keep all your Bitcoin always and only cash out some of the lifestyle chips. Anyway, study the indicator, and of course, this isn't the only indicator to follow. The second indicator that I'm going to talk about is the Bitcoin dominance indicator. And this is one of the most underrated indicator in crypto, the Bitcoin dominance. If you haven't seen it, try logging into Coin Marketplace. Again, link will be below in the video description. It's the number that says how much of the total crypto market is made out of Bitcoin. Right now, it flows around 61%. Sometimes higher, sometimes lower. But why should you care about this number? Because Bitcoin dominance is like a temperature gauge for the entire crypto market. Bitcoin move, all other crypto moves too. So usually if you see Bitcoin dips, all other crypto asset dips alongside. So let me explain what Bitcoin dominance. Let's break it down. First off, this is how Bitcoin dominance gets calculated. So Bitcoin dominance equals Bitcoin's market cap divided by the total crypto market caps. it's 70%, that means Bitcoin is most of the action. If it's 40%, that means altcoins are booming and people are taking bigger risks. And one important aspect that you need to pay attention to is when dominance drops to around 45%. And dropping to about 45%, it usually means a few things. Altcoins are pumping like crazy. Risk appetite is at full blast. Retail investors are diving headfirst into meme coin, low cap, and moonshots token. And when that happens, it often is a sign that the market is overheating. So now you may also ask, why 45%? Why is that a red flag? Historically, 45% Bitcoin dominance has been a tipping point. In January 2018, Bitcoin dominance fell to around 37% just as altcoin hit insane valuations. What followed? The entire market crashed. In May 2021, it tipped below 45% right before the big correction and wiped out trillions. And in late 2021, when Bitcoin dominance briefly touched 43 or 44%, altcoins were exploding right before the bear market took over. Why does this happen? Because when dominance drops, it means people are selling Bitcoin to chase altcoin gain. That only works as long as the party keeps going. But once Bitcoin stalls or worse drops, altcoins gets wrecked or drop much harder and much faster. So 45% is kind of like a psychological and historical threshold. It tells us that speculation has gone wild and smart money might already be heading for the exit. So do pay attention to this indicator and get ready to sell and get out if this indicator drops towards 45%. So when you see Bitcoin dominance falling 45% or lower, don't ape into buying anymore. Bitcoin or altcoin, start locking in profits, pound cost averaging out, and maybe even exit some of the position if you think you're overly exposed. Trust me, you want to execute that, because when the music stops, Bitcoin might easily dip 30 to 40%. In many cases, if you hold any other coins than Bitcoin, your altcoin bag could drop 70-90% overnight. Total wreck. You probably need to wait another 5 years to recuperate. And many times, some of these projects may not even survive the bear market. I made mistakes holding. Trust me, and let me continuously remind you all, do not hold your bag. Do not marry your bag. Get out at all costs. So yeah, Bitcoin dominance isn't flashy. It's not as colorful as the rainbow chart, but it's a powerful indicator. And when it hits 45%, I treat it like a yellow light turning red. It's time to slow down, reassess, and maybe take some chips off the table, or take all the chips off the table. If that makes sense, hit the like and subscribe, because we don't just ride the wave here on My Compound Life. We learn when and get out before the tsunami hits. The third indicator, okay, this is one of the most powerful but least understood indicators in Bitcoin and crypto. Essentially, it is the Global M2 Liquidity and how it moves in sync with Bitcoin. If you've heard or familiar with Raoul Pal that talk about the banana zone, this is exactly what he's referring. And let's break it down into simpler terms. So what exactly is M2 liquidity? M2 liquidity is just a fancy way of saying how much money is sloshing around the global economy. It includes things like cash, checking accounts, saving accounts, and short-term deposit. When M2 goes up, it means central banks are printing money or injecting stimulus. Liquidity is abundant. When M2 goes down, it means liquidity is drying up. Tighter credit, higher interest rate when people are hoarding cash. That also means you don't want to hold asset at that time, because your asset will most likely has gone down in value. So Raoul Pal noticed something huge. Bitcoin price follow global liquidity almost perfectly. Not just sometime, almost tick for task. So Bitcoin loves liquidity, and here's why. Bitcoin is a high beta asset. That means it reacts strongly to change in liquidity. When liquidity is rising, people have more money money, risk appetite, and Bitcoin surges, risk asset surges. When liquidity shrinks, risk gets crushed and Bitcoin dumps. So if you overlay Bitcoin's chart on top of the Global M2 Liquidity chart, you see every major Bitcoin bull run started when liquidity bottomed and began rising. That includes the 2017 bull run, to 2020 to 2021 rally, and even early signals for 2024 to 2025 as M2 starts ticking up again. So the banana zone, what it means. Raoul Pal obviously coined the term banana zone to describe the explosive phase when liquidity is surging. Risk on asset like Bitcoin goes vertical, a bit like the shape of the banana. This exact banana zone, what you can see, it's the moment when central banks cutting rates, liquidity pumps back into the system, and Bitcoin stop grinding and starts rocketing. If you're waiting to time a parabolic move, this is what you want to watch out for. You want to wait for this ride with this and have a gauge of how far Bitcoin price can get up to. Fully rely on two earlier indicators I've mentioned to inform you when Bitcoin is overheating, and pound cost average out will be your next step. Okay, fourth signal, which is the CBBI Index signal. Why the CBBI Index matters, especially when M2 doesn't work. So by now, you've probably seen how M2 liquidity, Bitcoin dominance, and even the rainbow chart can tell you when we might be near the top of the bull run. But here's the catch. Sometimes Bitcoin doesn't move or correlate with M2. In fact, according to Raoul Pal, the macro analyst, he also mentioned that Bitcoin only correlates with global liquidity M2 chart about 80% of the time. So what do we do in the 20% when M2 is flat but Bitcoin keeps moving? That's where the CBBI index comes in, and it might just be your secret weapon. So again, what is CBBI? CBBI stands for Colin Talks Crypto Bitcoin Bull Run Index. You can check it out at cbbi.info. Again, the link would be in the description. In short, it's a confidence score, a number from 0 to 100 that combines multiple on-chain and macro indicators to estimate where we are in the Bitcoin market cycle. Think of it like your car dashboard. It doesn't just show you the speed, it shows you oil temperature, RPM, fuel and engine health, and so forth. That's what CBBI does. It pulls in 10 plus different indicators like the stock to flow model, golden ratio multiplier, pi cycle top, Bitcoin search trends, and so forth. And it blends them into one simple number, so you don't have to analyze each chart yourself. All right, so here's how you actually use the CBBI index without needing a PhD in chart. The CBBI gives you a number between 0 and 100. That number is like a market temperature gauge for Bitcoin. So think of it like 0-30, it's the chill mode. This is when Bitcoin is cold, boring, or even scary. Prices are low, people are fearful, and nobody talks about it on the news. This is where smart money are buying, quietly stacking their sats while everyone else is distracted. 30 to 70, it's kind of like the neutral zone. This is the middle ground. Bitcoin might be rising, media coverage is picking up, and more people are paying attention. If you are already in, you're probably holding. If you are not in yet, you're still early enough to get solid entries. This is a be aware but don't panic zone. By the time it gets to 70 to 90, this is where we need to have the heat check. This is where when things get spicy. Prices are high exactly right now, $110,000 Bitcoin. Friends are texting you about Bitcoin. Influencers are calling for 1 million target, which by the way, will never happen in this cycle. Here, you want to start thinking like a disciplined investor and not a gambler, because maybe you start DCAing out selling a small percentage of your holding every week as the number climbs. By the time we get to 90 to 100, that's the blow off top zone. This is the red alert. Historically, when CBBI is at this high, we are near the peak of a Bitcoin cycle, and that's where you need to be all out. If you're thinking of selling, of course. Everyone's bullish. Coinbase is back on the App Store. This is the time to seriously take profit. Even if you don't time the absolute top, locking in gains now is how you protect your freedom later. So here's a summary of all 4 indicators I've mentioned earlier. Number 1, Bitcoin rainbow chart. It's kind of like a long-term value gauge. Use this to time your buy and sell, or even when to enter. Tell you if Bitcoin is cheap, fairly priced, or overheated based on historical trends. And it also serves as a sell signal when price enter the red maximum bubble zone. That's where past tops have formed. Number 2, Bitcoin dominance. It's kind of like a retail euphoria tracker. Tracks how much of crypto market is in Bitcoin versus altcoin. And the sell signal here is simple. When dominance drops to about 45% or lower, it means altcoins are flying and the market is frothy, and it's the time to be cautious. And for me, I'll be getting out perhaps even before the 45% reach. And the third indicator, it's the Global M2 Liquidity. It is the macro rocket fuel, because Bitcoin follows closely with global money supply. So when liquidity rises, Bitcoin rises. When it dries out, risk asset cash out. So the sell signal here is essentially if Bitcoin is running hot but M2 starts flattening or shrinking, exit before the party ends. And the 4th indicators, the CBBI Index, the cycle confidence meter for you to gauge. It combines on-chain and macro indicators into one simple number from 0 to 100. And the sell signal here is simple. When CBBI hit 90 to 100, historically, that's the euphoric peak. That's when smart money exit. This is where you and I need to exit to. So on this second part of the video, I want to talk a little bit about habits that we need to start building. Bitcoin typically spends less than 10 days in the golden zone. That is 5 to 10% of its all-time high, which means trying to time the perfect top, it's nearly impossible. Most people either miss it or react too late. If you're waiting to time the absolute top to sell Bitcoin, you're playing a game with razor-thin margin. In the last 3 bull cycle, Bitcoin stayed within 5 to 10% of its all-time high for barely 3 to 10 days. That's it. Here's a smart move. DCA out. Just like we DCA in when prices are crashing, DCA out when the price goes euphoric. So sell a bit into strengths, take profits on the way up. So when Bitcoin goes up, start taking profit, because when that reversal comes, it doesn't want you. Habits to build before selling Bitcoin at the top. You need to start practice taking profit. You need to start practice taking profit. Most of you probably spend all your time thinking about when to buy Bitcoin, but almost no one trains the habit of how or when to sell. So here's the truth. Selling is actually a lot harder than buying, because when Bitcoin is rising, when your portfolio is pumping, it's easy to tell yourself, just wait a little bit more. Maybe I'll sell tomorrow. It's going to 250,000, 500,000, it's going into 1 million. Let's ride this wave all the way up. But here's the thing, it never feels like the top when you're in it. Now imagine this, if Bitcoin is now at $167,000 per Bitcoin, and M2 global liquidity is expanding, and analysts like Raoul are calling for Bitcoin to reach $250,000, and that's your macro tailwind. But hear me out, But at the same time, all the other indicators we spoke about are screaming FOMO. So for example, rainbow chart is in red, it's in maximum bubble zone. Bitcoin dominance has dropped below 45% and CBBI Index climbed more than in the 90s. So what do? Do you ignore it and wait until Bitcoin gets to $250,000? Or do you build the discipline to take action even if the party is still going? And I'll tell you what I'll do, right? I'll set up layered out exit plan, because I know I'll never be able to time the perfect top, and no one does, trust me. So I take emotion out of it and pre-program my logic. If Bitcoin hits 150K, I'll sell 5% of it. At 175,000, another 5% of my Bitcoin would be sold. If we're blessed with 200,000, maybe I'll sell 10% or more. And if it goes up to 250,000 per Bitcoin because M2 is still surging, great, I'll have some skin left in the game. But if it crashed from 160 to 90,000 overnight, I've already locked in some freedom money. And that's the power of pound cost averaging out or dollar cost averaging out. It's not about fear. It's not about FOMO. It's about discipline over dreams. Okay, what about some other muscle memory you need to practice? One of it is make sure you unstake before it's too late. So depending on where you have staked your Bitcoin or your cryptocurrency, there could be a 24 hours, 7 days, 14 days, or even 30 days unlocking period. So trust me, you do not want to be stuck watching the price hike while your coins are locked up in staking. If you think we're getting close to the top, unstake ahead of time. Don't wait for the confirmation. Be liquid. Be nimble. Do not let that 5 to 7% staking reward to take away your opportunity of selling at the all-time high. And many of you probably haven't sold your Bitcoin before, so learn how to sell. Yes, seriously, learn how to sell on the exchange, right? Or anywhere else. This one might sound basic, but it really does matter. Right? Most people know how to buy, know how to stake, how to DCA in, but they never actually practice selling. So now's the time to get familiar with the selling process. Learn how to place a limit sell on the exchange. Practice selling, practice setting price target. Know what wallet or accounts your coins are in and how fast you can move them. You don't want to fumble during breakout. You want to exit like a pro. So start practice selling. Learn how to sell. Yes, seriously. Essentially, you need to train your exit muscle just like going to the gym. Selling should not be brand new experience at the peak of the bull run. Here's what to practice now while things are calm, right? Learn how to place a limit sell order. Don't wait for the price to rocket and try to figure it out in panic like how to sell. Set a limit sell for target, maybe 150,000, 175,000. Test it with small amounts so you're comfortable at the selling process and understand the fees, slippage, and the timing and so forth. Decide what you want to sell into. Do you want to sell into USDT, USDC, or even into fiat currency? Research which stablecoin is easier for you to move between exchange and bank account, because very likely you might want to start to cash out some of the stablecoin into a fiat currency like the pounds or US dollars or any of the currency of your country, and understand the risk. Take for instance, USDT has a massive adoption globally, but sometimes may have regulatory concern. USDC has regulatory concern, but is less liquid on certain platforms. So pick one and get really familiar on how it behaves on different exchanges. And also make sure you know how to move your stablecoins to your hardware wallet, because very likely you want to store everything in a centralized exchange, and bridge it to a platform where you can withdraw into fiat or use it for real world spending, like, open a credit card that you can actually spend your crypto. And seriously, you need to, know where all your coins are sound obvious, but seriously, are your coins on an exchange? Is it safe to continuously store it in the exchange? Are they in cold storage in a staking pool, as I mentioned before, with 14 days unstaking period? Make sure you know how fast you can get access and move your cryptocurrencies or your Bitcoin. So don't get caught during pump when you're stuck in some DeFi farm and you forgot and somehow you've forgotten about it. And most importantly, you need to block out noises, right? Because here's the thing, when Bitcoin hits the next all-time high, you hear it all. We're going to 500,000. This is just the beginning. 1 million Bitcoin is inevitable, right? You feel like taking profit is weak, but taking profit is not weakness, it's winning, right? You're not here to impress anyone. You're not here to impress X. You're here to build freedom. So repeat this mantra. Practice your exit plan. Sell with intention and not emotion. Okay, thanks so much for watching today's video. If you found value in this video, hit the like button, drop a comment, and let me know what your sell plan looks like. And of course, subscribe to the channel so you don't miss the next one. Here on Compound Live, we're not here to chase hype. We're here to build asset. In this specific video, it's Bitcoin. And we're here to also build habits. And I've spoke about the 4 different indicators, especially at the Bitcoin all-time high now. You know, we need to start paying a lot more attention on some of these indicators to let us know whether Bitcoin we are overheating. And of course, we're here to start to build habits. And in this specific video, we spoke about habits of selling. Make sure you know the process and protocol to sell. And ultimately, all of this would lead us into building freedom. So one smart decision at a time. And remember, it's not about timing the perfect top, right? It's about having a plan, sticking to it by taking profits. And I'm simply just guiding you what indicators to look out into, right? So I'm Jonathan, and I'll see you in the next video. Thank you.